Greetings, everyone. This is RKrivo with our chart reading session for July 30th. And just as an update, at the present time, open trades on currency pairs that we have stalked on this drill down process. And please keep in mind, I want to emphasize that I do this process personally on a daily basis to keep track of how the market is moving as pairs move from a higher probability level to lower probability, that type of thing. So I do it on a daily basis. What I'm sharing with you here is perhaps once or twice a week. Both provide insights. Every day when you do it, it provides greater insights. So based on that, our open trades currently are up roughly 2,400 pips since the first trades triggered back in mid-June. And some of the trades that we're in have been stopped out for losses. Others have been stopped out profitably as we've trailed our stops along the way. And as this currency market ebbs and flows, my goal is simply to enter trades on pairs that are trending, ride along with them for a while, and then through proper trade management, take profits and losses as they come. And the bottom line is that our open trades are net profitable. Obviously, that is our ideal outcome. This is not always going to be the case, as we're going to have losing trades. We've had losing trades already, and those are factored in our net positive result thus far. And my overriding objective is simply to identify the higher probability pairs, identify a point at which I would like to enter those trades, and then let the winners run and cut the losers in relatively short order. And as we go through the charts, if you have any questions about how and why my charts are set up the way they are, check out the video entitled Chart Tutorial. It was posted on May 11th. You can also email me at RKrivoFX@gmail.com. You could also, if you're not following me on Twitter, that's my Twitter handle there, and you can follow me as well there. Okay, let's get the disclaimers out of the way. Trading foreign exchange involves significant levels of risk, may not be suitable for everyone. We should only be trading with risk capital. Don't invest money that you cannot afford to lose. The high degree of leverage can work against you as well as for you, and the content that I'm providing here is for informational and educational purposes only. It's not intended as a specific trading recommendation of any kind. Just to be clear, I'm in no way guaranteeing or implying that any setup you see in this video is going to result in a winning trade. My goal is simply to teach you how to read the chart so you don't have to rely on someone else as you move forward with your trading. And under that heading of teaching, if you want to learn more about trading and have me as a personal mentor online, email me at RKrivoFX@gmail and put one-on-one or mentoring in that subject line. And each day when I do this drill down, what I'm doing is I'm just looking for trading setups, higher opportunity trading setups that may result in a positive trading result. And a setup, by definition, is a setup. It's just that, nothing more. It may or may not trigger, and if it does trigger, it may or may not produce a winning trade. What we're all about here in trading is we're looking at probabilities. We want the setups that we're looking at to have a higher probability of success, put the percentage, if you will, of having a winning trade more in our favor, and the setup and its execution by no means assure a winning trade. Okay, let's take a look at the charts here. Let me get out of this. And hang on one second here. There we go. Okay. And I have the Aussie USD chart set up there. And we've got a weekly, a daily, a 4-hour, and a 1-hour chart. And most of you know, if you've been following me for any length of time, know that I do a strong week currency analysis. I did one just before we got started here. And right now, this helps zero me in on the trades that have a higher probability of success based on a strong week analysis. And right now, the Aussie dollar is the weakest currency that's out there. The US dollar is the strongest. So the first chart I bring up is the Aussie US dollar. And what I'm seeing here on the weekly chart is the pair has been making, it's in a downtrend. We can see this from left to right on the chart. If we would draw a line connecting the last candle on the left to the last candle on the right, we're going to get a straight line to the downside, no question about it. So the pair has been building out, had a little bit of a retracement here on the weekly chart, But basically, lower highs, lower lows, which by definition is a downtrend. We also, on slow stochastics, we have angle and separation below 20. That is a good bearish sign right there. And if we scroll out, indication of bearish momentum, if we scroll out here, we can see that the low this pair has traded to is roughly 0.7246. And if we follow that dotted line across to the left-hand side right here, we can see we've got a fair amount of room that this pair can drop. There's some minor resistance, or excuse me, minor support on the way down, but potentially it has some room to move. And as you've heard me say before, just because a currency pair has room to move doesn't mean it's going to drop like a rock once it breaks through support. So I would go down to a lower time frame chart, and I could do this on either the 1 hour, which is what I'm looking at right now. And what I like to do is I like to set price alarms. So I would set a price alarm on this pair at about 72.55, or maybe a little bit ahead of that, maybe 72.60, somewhere around in there. And the idea is once that alarm triggers, I'm going to go and look at the Aussie pairs and the USD currency pairs. And what I want to see, ideally, is the Aussie be weak across the board, the US dollar be strong across the board, and that's going to give me even a bigger trading edge on this particular pair if that is the lineup. That's why I set a price alarm as opposed to strictly an entry order where, okay, put me in at that level. And here we see slow stochastics on the 1 hour chart, angle and separation to the upside. That's fine. It's opposite the direction on the longer term charts, but what it's telling me is that we're going to maybe get a little healthier bit of a retracement here. We touched the upper Donchian channel, we took out the lower Donchian channel right there, and we got a nice long wick down. So the point at which I want to take a peek again is at about 72.55, because I know that we've got a strong versus a weak currency. I know we've got room to run, and I know that by looking at the weekly and the daily chart here again, lower highs, lower lows, and slow stochastics is below 20, all bearish signs. So I've got a trading edge in this one. Whether or not it turns into a winning trade is quite another matter, but that's the one that I would be taking a look at based on the strong weak analysis. Next, using the Aussie as the weakest, we go next to our second strongest currency, and that's the pound. So now I would bring up the pound Aussie currency pair, and that's the one we've been in for quite some time now. As a matter of fact, we had a couple entries on it, and we can see here how the pair on the weekly chart, has just been building out ferociously to the upside here ever since. Let's see if we go back here to May, first week of May. The pair hasn't looked back, on the weekly chart. It's moving up so well that in some ways it almost gives me pause, because something at some point's got to retrace. And what we can do here is we could put on a, fib levels here and take a look and see, ideally, at some point this pair is going to retrace. Potentially it might retrace to a fib level, but you can see when it retraces, if it retraces to even one fib level from where it is right now, it's going to be a retracement of about 800 pips on the weekly chart. So it's going to be pretty significant. Anytime I see a currency pair get this strung out, if you will, to the upside, it gives me a little something to think about, because rather than trying to jump on this train again to the upside, I'd almost prefer to wait for the retracement to occur and then jump back in the direction of the trend when it stalls and starts to move back in. And we can see here on our daily chart, price action is moving up very nicely, higher highs, higher lows, nice stair-step fashion. On the 1 hour chart, it touched the lower channel, took out the upper channel, hasn't touched the lower channel again, but has had, let me get my cursor in line here, a fairly decent pullback here. After it took out the upper channel, we retraced about 140 some odd pips, We can take a look at slow stochastics here. It's still open to the downside, but notice how the fast line, the K line, is kind of bending a little bit. It's getting poised to roll over to the upside. Whether or not it does that is entirely a matter that's up to this pair and the market. We have no control over that. So I would be looking on this particular pair where I'd consider setting a price alarm is at 2.1524. And again, I'd be looking at pound strength across the board, Aussie weakness across the board. Let's check out our weekly chart. And if I'm not mistaken, this pair still has a fair amount of room, upside room. Yeah, it definitely does. We're right now roughly at 2.1474. And as I move across that dotted line to the left, I can see here that the pair has still got potentially another 800 some pips left in it. If that in fact carries through to that level, this would be quite a trade without a retracement. But again, I'm concerned potentially because the pair has been moving north here for quite some time. Okay, let's take a look at, still keeping our Aussie as our weakest pair. Let's look at the yen, which is the third strongest currency pair. So we're going to take a look at the Aussie yen and see what that might have for us here. Okay, and looking at the weekly, we've got where price action took out the lower channel, didn't quite touch the upper channel, took out the lower channel again. Last week it closed below the 200 period moving average, and it's trading right about at the 200 period moving average on the weekly chart right now. We've got good angle and separation to the downside on slow stochastic. Bottom line on the weekly chart, we're in an open sell situation, which means we look for selling opportunities on the lower time frames. Again, on the daily chart, same thing. Touched the upper channel, took out the lower, continually has taken out the lower. Nice retracement here. And if I go down to the 1 hour chart here, I see something interesting here. Our Danchin channel, our lower Danchin channel has moved up quite a bit. So an entry would be, after price action touches the upper channel, would be to take a look at about, let's see, what is that channel line priced at there? 90.18. So I would set a price alarm around 90.18, maybe 90.20, 90.25, just to come ahead, come and get a little peek a little bit ahead of time. And that's right at the bottom of that wick. And the potential there is about 80 some odd pips. And on a longer term chart, just if it drops from that, hang on one second, my cursor is acting up here. If it just drops there, we're looking from that point to the bottom Danchin channel, the previous low on the 1 hour chart, that would be about 80 pips. If we go back out to our weekly chart and take a look here, we can see that, okay, right there, we've got more support yet. So if it continues to drop, it might be a little bit of a bumpy ride going down there. Let's see if we can squeeze in one more currency pair. Let's do the USD Canadian. The dollar is the strongest currency, and the Canadian is the second weakest. And there we are there. Okay, so we can see we had a nice retracement on the weekly chart. Took out the upper channel. Good angle and separation to the upside. If we would get into this trade, if we find an entry or a place where we set our price alarm, that's the previous high. It's above the high, which was back over here back in 2009, quite a while back. And we've got a good opportunity here to move higher. Okay, so I'd be looking, I like the 4 hour chart, and I might be looking for a price alarm at about 1.3098. And we're approaching our time. Thanks for being with me this evening, and I look forward to doing this with you again next time around.